If I were to put a name to 2021, I would call it the rapid reopen. As vaccines became more readily available, economies around the world opened up. Fueled by the residual of $16 trillion in fiscal and monetary stimulus from 2020, and consumers were ready to go on a spending spree. Investors now are beginning to think about 2022. As I think about the year ahead, I highlight three broad themes. One, there's an economic transition from rapid reopen to normalization. Two, equity returns are going to be more average in the year forward than what we've seen. And three, inflation is going to be more persistent than transitory. Economic growth is likely to moderate in 2022, but we shouldn't confuse slower growth for low growth. I expect 2022 to still be a strong year, just slower from the very high growth rates of 2021. Given continued strong demand, low inventories, and a supply chain that needs to catch up not only to the backlog of demand, but also continued demand, economic growth should remain quite healthy through next year. After strong returns in 2021, equity markets will be much closer to average over the coming year. I think 2022 will be another positive year for equity investors, but from the 20% plus gains enjoyed in 2021, investors shouldn't be surprised if returns are much more in the mid-single-digit range. Moderating economic growth will also lead to moderating earnings growth. Along with a continued valuation compression, these factors are likely to keep equity returns more modest. But whereas 2021 saw similar returns across equity markets, the valuation differences between indexes lead me to believe we could see a greater range of returns across global markets for 2022. The bond markets in 2022 will be about the transitory inflation story that wasn't, and what central bankers are going to have to do about it. Inflation is likely to stay higher than what we've seen in the past 10 years, but I wouldn't classify it as bad inflation. This is demand-driven inflation. In other words, I would disagree with those who believe we are heading into a 70s-style stagflation environment. Inflation will prove much more persistent, putting the term transitory to rest and setting the table for a higher rate environment. I believe central bankers have to catch up, and as a result, we could see another challenging year for bond investors. Overall, while 2022 may see a couple of growing pains along the way as we transition from the rapid reopen to normalization, I believe it will prove to be another good year for investors.